Hello viewers, myself Anupam Junjunwala, a chartered accountant and a US CMA and ACCA faculty. And today we shall be taking the introduction class and just a demonstration class to know exactly about what US CMA course is and what are the contents of this course. And will also be discussing one of the topic from the syllabus of the course, that is difference between GAAP, US GAAP and IFRS, and what are the major key points of differences between them, and why is it important for a CMA US CMA professional to have the knowledge of both of them. So coming to our point, uh, we'll be learning this with the help of a PowerPoint presentation which I have prepared for the purpose of the reference towards for my students. So coming forward, let me give a starting introduction to the course. Is that US CMA course is not like ACCA or like Indian CA, where we are having different kind of levels, that level 1, level 2, level 3, and we are having multiple papers. No, we are having just two parts, that is part 1 and part 2, and both of the parts have more or less equal weightage. Maybe part one has some where 20% more weightage. With respect, weightage means here means syllabus, and we'll be learning that both the parts. And after having the thorough study of the syllabus of the both the part, one can appear and clear both the parts. It is a add-on course, and for those students who are doing BCom or MCom right now and want to see their career in a global corporate or a multinational company, or in a company who requires information analytics, financial budgeting, who requires a cost accountant, or various analysts, then management this course is applicable for those professionals to just make a add a necklace to their BCom or MCom degree, and to other working professionals also, and even for the chartered accountants if they are intending towards those companies who are searching for US CMA professionals. So it's a global certification. The Certified Management Accountant, that is CMA, is a globally recognized professional certification offered by the Institute of Management Accountant. It is a authorizing body, that is IMA. In short, it is called Institute of Management Accountant, which gives this certification. Core focus areas: it focuses on essential skills for business leadership, management accounting, financial analysis, strategic management, and informed decision making. That is financial analysis. Management accounting means cost accounting. Business leadership, strategic management, that how do you manage the company. These all skills and these all means theory and practical perspective we learn in this course. This course has two parts. That is, first of all, is FPPA, which stands for Financial Planning, Performance and Analytics, and the second part stands for SFM, which is Strategic Financial Management. Under FPPA, we have budgeting and forecasting, performance management, cost management, and internal controls. And under part 2, we have Strategic Financial Management. We have financial statement analysis, corporate finance, decision analysis, and risk management and investment decisions. Okay, so these are the two parts. And why and who can pursue CMA? Let us see forward. Those people who can pursue CMA, who wants global recognition, that is a CMA credential, is recognized over 50 countries, making it a valuable asset for the professionals seeking international career opportunities and leadership roles. It bridges accounting and management skills, preparing professionals for influential role in financial leadership, corporate strategy, and global business environment, and career advancement. Earning your CMA can significantly enhance your career prospects, leading to higher earning potential and more advanced positions. So what happens, friends? In this class, it is a demonstration class and it's an introduction class. So we'll be learning partially. This class shall be about what CMA course is, and the next partial will be about the difference between the US GAAP and the IFRS, which is the syllabus of the part 1. Okay, so coming to the syllabus, one of the crucial discussion under this is Gaap versus IFRS. See, while we'll be moving to the for the main classes, we'll be learning about what these things are. Means, as an Indian professional, we always remain confused that what is Ind AS, what is AS, what is Gaap, what is IFRS, what is IAS, what is ASC. So we remain confused, and I'm there to solve the confusion that what ASC is accounting standard codification, what IFRS is international financial reporting standards, what GAAP is, what Ind AS is, what AS is, when, where, how, in which circumstances, which is applicable, where it is applicable. A mass level of the confusion will be cleared with respect to this. Today we are discussing the difference between GAAP and IFRS. So let me teach you one thing, that the entire standards are being categorized into two different subjects. What is first of all is accounting standard, and other is auditing standards. So under accounting standards, we have one standard for the US, for the India, one standard for the whole of the world, and the one we have for the United States separate. So the accounting standards which we learn for with respect to United States are called GAAP, that is generally accepted accounting principles. And those are principles, accounting principles being which have been followed in US accounting arena, and that is with respect to US companies or companies with respect to US financial or economic curriculum. So US accounting framework, rule based, highly detailed and regulated by FASB, that is Financial Accounting Standards Board. It is a board of United States which regulates the financial accounting standards, and it is a rule based. It is not principle based, it is rule based, means what has been told is told, and it is very much detailed and specific. But since US is a strict country, as we know, so in the same way, its gaps are also rule based. But IFRS stands for International Financial Reporting Standards. It is global. It is not US specific. It is global, and it is a global accounting standards principle based set by IASB. IASB stands for International Accounting Standards Board. It is adopted by 140 countries. So where GAAP is only US based, IFRS is a global accounting standard, financial reporting standards, and whenever the companies make their financial reporting on the global arena, so that everyone can understand the same accounting language and there is no specifications and difference in the accounting languages, though IFRS is being followed. That is the crucial point of difference between IFRS and GAAP. GAAP is a specific US based accounting language, and IFRS is a global accounting language. Moving further, what is the recognition perspective? So with respect to recognition, how does inventory gets the recognition difference, and how the revenue gets recognition difference with respect to GAAP and IFRS? Let us see. With respect to revenue, that revenue means how the sales how the sales or revenue or the income is been recognized. With respect to US GAAP, is that utilizes detail often industry specific rules to determine whether revenue is recognized. Under GAAP, they have written detailed and industry specific rules that in which industry, say it in manufacturing industry, in food processing industry, or in any service industry, how revenues are to be recognized. And IFRS employs a 5-step principle based model focused on the transfer of control of goods or services to the consumer. And then we have inventory valuation. So under inventory valuation in India, in Indian accounting standard, it is governed by AS2. In internationally, what happens in under GAAP, that it allows the rule of follow of either the option of FIFO, LIFO, and weighted average, all three. As per the convenience, but IFRS prohibits LIFO. Here we have some restrictions with respect to IFRS, that IFRS doesn't recognize LIFO, that is last in first out, and mandates either FIFO or weighted average. LIFO means last in first out, FIFO means first in first out, where our weighted average means taking the sum total of all the inventory of a particular class and thus dividing it with the number of the inventory, that is a weighted average. So GAAP makes the option of provides us the option of both LIFO, FIFO, and weighted average. Going further, it's since it's an introduction class, we are just having an overview or bird's eye view of the topic to understand our points in an introductory way. So what are the key differences with respect to asset valuation? Asset means a fixed asset. When we talk about inventory, we have seen. Now with respect to fixed assets, GAAP says that primarily uses historical cost for most assets, valuing them at their original purchase price. RFRS permits revaluation of certain assets such as property, plant and equipment to fair value under specific conditions. Fair value and the historical value. Historical value means the value at which it has been purchased, or it is the original purchase value, and fair value is a value at which it is being valued currently. IFRS makes the inclination towards the fair value of the asset valuation or the fixed asset valuation and revaluation, and it also allows revaluation. Revaluation means change in the value with respect to the time. Maybe it can be an increment or even a decrement. So revaluation of certain assets such as property, plant and equipment. But GAAP, US GAAP says that no, assets have to be recognized at the historical value. Now with respect to financial instruments has more, US GAAP has more prescriptive categories and rules for classifying and measuring financial instruments. It has more prescriptive categories and rules for classifying and measuring financial instruments. Means a lot of specifications and categorization of the financial instruments have been done in US GAAP, but in IFRS classifies and measures financial assets based on the entity's business model for managing them and their contractual cash flow characteristics. So IFRS here is liberal with respect to classification of the financial instrument, the but US GAAP is very much prescriptive and specific with respect to classification and codification of the financial instruments. Now, IFRS principle based and flexible. So the final conclusion can be drawn that IFRS is principle based and flexible, emphasizes fair presentation materiality, allows more judgment in the fair presentation materiality. Materiality means how much material the content is, the value which cannot be ignored. Allows more judgment in the content and the format of the disclosures, and focuses on providing useful information to others. Moving further, gap, detailed and prescriptive. Gap is detailed, means US IFRS is material and gives us a principle, but gap is specific and stricter. The descriptive, detailed and prescriptive requires more extensive and detailed disclosures. Specific line items and formats are often mandated and emphasis on adherence to specific rules. For example, the presentation statement of comprehensive income can vary significantly. IFRS offers flexibility while gap is more prescriptive. What is this statement of comprehensive income? It is stated that is P&L account. So under gap it is more prescriptive, it is very much rule based, but IFRS with respect to presentation of statement of comprehensive income is very much principle based. Okay, so overall difference between IFRS and GAAP has been presented over here, that requires more extensive and more detailed disclosures. Specific line items means items of the financial statements, that is statement of comprehensive income and statement of financial position, that is balance sheet. And formats are often mandated, means it is mandatory that you are supposed to show this particular, disclose this particular item over this head only, and you are bound to do that. Means it has been rule based and specifically, but it is IFRS is principle based, gives liberty. Implications of for US CMA professions. Why is it important for a US CMA to have the knowledge of both, that is US GAPs and IFRS? Global competence. Understanding both GAAP and IFRS is critical for navigating global financial reporting competencies, complexities, and making informed decisions in interconnected world. Today, as you know, that the economy of the world is connected. Every country is having trade with each other country, and every company wants to have its competencies on the global level. So you must be having the you must be known with the both accounting language. One is accounting language of the US and accounting language of the world, that is of the global, because the world is economically and financially interconnected. And the strategic edge, the US CMA equips professionals with the knowledge to analyze financial statements prepared under different standards, enhancing their strategic and operational impact. And third is multinational readiness. Professionals with dual expertise are highly valued in multinational corporations where financial consolidation and reporting often involve both framework. If you are a kind of professional who has the knowledge of both, that is US GAAP as well as IFRS, definitely you shall be given an advantage, and you shall be in a more limelight than in comparison to those people who are only country specific knowledge holders with respect to those. So today we must have the knowledge of both, that is IFRS and GAAP, and specifically we must have the knowledge of the difference between the reporting of those. Conclusion: mastering US CMA and accounting standards. Expertise in financial management. The US CMA course builds deep expertise in financial management, strategic decision making, preparing for leadership, bridging global standards. Mastery of US GAAP and IFRS differences in recognition, measurement, and disclosure is essential for success in today's global business environment. Mastery of GAAP and IFRS differences. To know the differences, you must know the exact what those things are. Then only you can find out the differences between the both. So you must be aware about the difference in the reporting and disclosing requirements under GAAP and IFRS. Embrace continuous learning. The accounting landscape is constantly evolving. Embrace continuous learning to stay ahead and drive innovation in your career. So that's it for today, students, and I think I was capable of making you aware about the differences, key differences between the US GAAP and global US GAAP and IFRS, that is global accounting standard, and to make you understand that what is the structure of this US CMA course. And if you make decision to proceed further with our classes, then we will be learning each and every topic, each and every subject, each and every chapter in detail, along with the concepts, with its illustrations, questions, and last year questions, MCQs, and live viva also on periodical basis. So if you want to move further, comment for the same. Wishing you a very good career ahead. Thank you so much, friends.